Day trading for beginners. Day trading is great for purchasing and selling stocks within a short period instead of holding them for a long time. In simple words, you buy some assets when their price decreases and then sell them when the prices increase again. Day trading requires skill if you are willing to make money rather than lose the money. You will find a lot of stuff to learn when you are new to day trading. Not only do you have to decide and select what you have to trade and how much capital you have to put in, you have to acquire the right equipment and the necessary hardware and software by determining the time to trade and also managing your risk. Day trading is becoming very popular as more people want financial independence and the flexibility to live on their terms. Being a day trader, you don't have to worry about the market rise and fall, as you will be looking at the particular assets you'd like to trade. You can make a profit as long as the stock market fluctuates up and down. Well, continue watching the video until the end to learn more about day trading and how to become successful in day trading, especially as a beginner. So, without wasting time, let's get into the details. First of all, let's start with the best day trading strategies that are going to help in your day trading journey. Number 1. Acquire enough knowledge. Day traders should stay updated with recent stock market events and affairs impacting equities. It can include interest rate projections from the Federal Reserve System, releases of leading indicators, and other economic, commercial, and financial news. So, make sure to do your homework and design a list of stock details you want to invest in. Keep yourself updated on the firms you've chosen, their stocks, and the overall business. Examine business news events and list reputable online news sources to bookmark. One of the complex factors of learning to trade is the vast amount of information available. The information you gain can change frequently. It is because what works for one strategy's technical analysis or entry and exit conditions may not work for another approach. Reading books and watching videos are the initial steps in acquiring day trading vocabulary and technical analysis. Number 2. Setting time. Trading not only requires funds, but also requires your time. And you might have to give most of your time in a day to trading. That's why it is suggested if you cannot set aside a considerable amount of time for day trading, then try not to consider it. Because you have to forego most of your time, as it requires a trader's constant monitoring of the business and the ability to detect opportunities for trading periods. The importance of being attentive and moving fast cannot be overstated. Number 3. Setting funds for trading. Before you start day trading, make sure to set aside the funds that you want to trade. Also, committing to a certain amount of capital is important. Most of the traders put their funds at 1 to 2% risk of their accounts, as it is a successful approach. Also, it's critical to have a precise setup, trading system, or methodology before you begin trading. It helps you focus on developing skills in one area rather than attempting to locate possibilities for multiple configurations at once and never truly mastering any of them. Number 4. Practicing your skills. Use a demo account to practice your trading approach regardless of the market you choose to trade. It allows you to practice all day, even in a closed market. Because no 2 days in the markets are the same, it takes practice to spot trade setups and execute them without hesitation. Before switching to live to trade, practice for at least 3 months and get to the point where you can consistently make a profit. When traders move from the demo to the live account, they usually notice a drop in performance. Demo trading allows you to test your approach and see if it works. Number 5. Get rid of penny stocks. You might be looking for fantastic offers if you are starting as a day trader, and penny stocks can seem enticing because of their low prices. But penny stocks can be difficult to trade, which makes them not feasible for day trading. There is a strong chance that they can get delisted from big stock exchanges suddenly. So, as a beginner, it is highly recommended to not go for penny stocks unless you have enough experience in day trading. Number 6. Work with patience. With day trading, it's easy to become emotional and respond rashly to bad or good news, and it can result in bad decisions. Instead, whether selecting to purchase or sell, stick to your approach. In day trading, logical choices are more beneficial as compared to emotional ones. The stock business can put your nerves to the test. As a beginner day trader, it is essential to control your emotions, like hope, fear, as well as greed. So when you get control of your emotions, it will be easy to make decisions based on reasons and studies. Number 7. Start small. As a beginner, starting with 1 or 2 stocks is easy to track and check possibilities. It implies that if the shares of Amazon are currently priced at $3,400, many brokers will let you purchase a fractional share for a minimum of $25 or 1% of an entire Amazon share. You don't want to risk losing the money you need to meet your basic living expenses because, mostly, it is noticed that many traders lose money as a beginner. So, it is crucial to specify the smaller amounts that you can invest without getting into risk. A quick reminder, if you've enjoyed the video so far, consider subscribing, as we frequently upload such informative and educational videos. Let's continue. Number 8. Use limited orders. The limit orders allow you to buy or sell at a particular price. Well, a limited order to purchase can be executed at lower or limited prices. On the other hand, a limit to sell can be executed at a higher or limited price. In both of these orders, you don't have to pay much, and also you cannot lose. You place the order with your brokerage. The trade is automatically completed when the stock hits the price you specify. It can save you from losing a lot of money. Well, a limit order confirms or guarantees the price, but it does not provide execution. Because you select the price at which your order should be executed, limited orders can help you trade with greater precision and confidence. On reversals, a limit order might help you cut your losses. If the market does not reach your price, your order will not be filled, and you will keep your position. Number 9. Profits must be realistic. In the case of day trading, it is not essential that your plan must work always, or it should be successful. Well, in day trading, many successful traders can only make a profit from 50 to 60% of their trades. But it depends on how realistic a plan you made for expected profits and you to decide things logically, not emotionally. Also, make sure that the financial risk is limited to a specific amount of percentage and that the entry and exit methods are clear. Ensure each trade's financial risk is confined to a specific percentage of your account and that the access and exit procedures are specified. Number 10. Stick with your plan. To be a successful trader, you have to perform the tasks rather than do them quickly. And this is the approach of a good trader. Because a good trader plans things by making a trading plan and sticking with it. Instead of going to track incomes, it is essential to penetrate your formula. Remember the day trader's mantra: make a strategy for your trade and trade your strategy. Now let's look at some factors that make day trading challenging. Well, day trading necessitates much knowledge and experience and various elements that make it a difficult thing to do. First, you will meet some professional traders. And these individuals possess the most cutting-edge technologies and industry ties. That suggests they have a good chance of succeeding eventually, and it usually shows that they will make more money. As a beginner in trading, you can be vulnerable to psychological and emotional biases that can impact your trading. For example, when your money is on the line and you're losing money on a specific trade. Expert traders with extensive experience and huge wallets can usually overcome these obstacles. Let's discuss some tips and tools that can help you in selling and purchasing stocks. First, let's talk about when to purchase. After deciding which stocks or assets to trade, you'll need to figure out where to place your trades. The following are some tools that can assist you with this. Real-time news services. Because news affects stock prices, it's critical to sign up for services that notify you when a potential market-moving report is released. Intraday candlestick charts. The raw price action analysis is provided by candlesticks. These will be discussed in greater detail later. Level 2 quotes, or ECN. Electronic communication networks, or ECNs, are computer-based systems that present the highest available bid and ask quotes from numerous market players before matching and executing orders automatically. Level 2 is a subscription-based service that allows users to view the NASDAQ order book in real time. Every NASDAQ-listed and OTC bulletin board security includes price quotes from market makers in the NASDAQ order book. Let's talk about things that help you in selling. Trailing stops and profit targets are two options for exiting a successful trade. The most popular means of leaving are profit targets. They refer to making profit at a specific pricing point. The following are some examples of profit target strategies. Momentum. In this type, trading on identifying substantial trending moves with enormous volume. One condition of speed is that traders will purchase on news releases and swing a trend until it reverts. Another type will make the cost increase less noticeable. When the magnitude declines, the price target is reached. Daily pivots. Getting profits on a stock's daily volatility is the aim of this strategy. You attempt to buy at the day's low and sell at the day's high. The price goal is merely the next hint of a reversal in this case. Fading. It is based on the notion that they have been overbought, that early buyers are poised to profit, and that existing buyers are being scared away. This method, while dangerous, has the potential to be tremendously rewarding. The price target is reached when buyers begin to enter the market again. Scalping. One of the easiest and most famous strategies is scalping. It allows selling a task almost as soon as it becomes profitable. The price goal is the amount you expect to profit from the value.